Can the HDFC Life Guaranteed Wealth Plus plan be the ideal solution to help you achieve both financial protection and wealth accumulation in the long run? Let us find out the answer to this question through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand what this policy is about. This is a non-linked, non-participating individual life insurance savings plan. Some of the key features of the policy are: you pay once or for a limited period of time and enjoy life insurance coverage during the full policy term, and guaranteed benefits on survival in case the income variant has been opted, and the choice to take guaranteed benefit as a lump sum at maturity or as regular income and lump sum both is available. These are some of the key features of this policy. There are benefits like death benefit, maturity benefit, and survival benefit, which all will differ based on the plan variant you have opted for. So now let us take a look at the advantages and disadvantages of investing in this policy. So let's start with the advantages. So policyholders can avail of loans under this policy. Policyholders have the flexibility to choose the mode for both premium payment and guaranteed income payouts. Rider options are also available to enhance your protection, and tax benefits are available for both the premiums paid and maturity proceeds as per the prevailing tax laws. So these are some of the advantages. However, the disadvantages are no alterations are allowed other than the changes in the premium payment mode and guaranteed income payout mode. The life cover is reduced after the premium paying term, resulting in less life coverage during the income payout period, and there are no loyalty additions available for staying invested in this policy. So these are some of the drawbacks of investing in this policy that you need to keep in your mind before deciding to invest in this policy. Now, if you want to know more about these aspects of this policy in detail, you can refer to the policy brochure. So now, as we have a basic understanding of this policy, let us move on to the analysis part of the video, where to help us make a more informed decision, we are going to calculate the internal rate of return by analyzing the IRR on the benefit illustration given in the policy brochure. So now, for calculation purpose, let us assume that a 35-year-old male has opted to pay a single premium of 10 lakhs for the lump sum variant of HDFC Life Guaranteed Wealth Plus plan with a policy term of 15 years. So he receives a life insurance cover of 1.25 times the single premium, amounting to 12,50,000 at the policy's inception. In the lump sum variant, the final maturity benefit is provided at the end of the policy term. The guaranteed maturity benefit is 21.45 lakhs, resulting in an IRR of 5.22% as per the policy's maturity calculator. Although the returns are guaranteed, the rate of return is lower than that of a typical debt instrument. So for those looking to park a lump sum, there are alternative investment options such as bank fixed deposits that offer guaranteed higher returns. Additionally, the life coverage provided under this policy is minimal. The life cover and guaranteed benefits are the key features of this policy. However, neither aspect is compelling enough to make this plan a worthwhile investment. Overall, this policy is a traditional policy with mediocre returns. So the returns offered by this policy is not sufficient to consider it as a viable investment option. So to determine the best way to utilize your savings, we are going to compare the returns of other investment options with those of the HDFC policy using similar metrics from the previous example for a fair comparison. So here in this alternative strategy, we are going to invest in insurance and investments separately to see whether investing separately can give us better outcomes compared to investing in a bundled product like HDFC Life. So for life cover purpose, we have opted for a pure term life insurance policy with a sum assured of 12.50 lakhs, which cost a single premium of 54,500 rupees for a 15-year policy term. So in the previous example, the premium was 10 lakhs. By choosing a pure term life insurance policy, you save 9.45 lakhs, which can be invested to achieve your future goals. So here in the scenario, the saved premium is going to be invested in an ELSS fund, which has market link risk, because as you're going to invest for a long-term period, there is a higher potential for better returns in the long-term period. And always, if you choose to look at the track record of ELSS, you can see that it has even outperformed its average benchmark returns of 12%. So if you're a risk-averse investor who's not willing to take a lot of risk, you can stick to debt instruments. So the pre-tax final maturity value in the ELSS fund would be 51.75 lakhs. So after accounting for capital gains tax, the final maturity value comes around 46.62 lakhs. So if you have any doubts regarding how the ELSS tax is calculated, we do have a small tabular column presented in the screen for your easy reference, which you can pause and see. So this substantial corpus can help you achieve various life goals. So the IRR for the combination of pure term life insurance and ELSS investment is 10.81%. This is calculated on the post-tax return of ELSS. So this rate of return outpaces inflation, making it a favorable investment option. So the substantial corpus and inflation beating returns are missing in the HDFC life policy. So what is the final verdict then? Is investing in the HDFC life guaranteed wealth plus plan worth it or not? So this is a policy which is designed as an insurance cum savings plan to provide financial security through death benefits or financial support via guaranteed survival or maturity benefits for achieving your financial goals. However, it falls short in both the aspects. The return analysis in this video clearly shows that even the lump sum variant yields relatively low returns. So if you opt for the income variant, the regular payouts will further reduce the returns in the long run. So to achieve your future goals, especially in an inflationary environment, your investment should generate a post-tax return higher than the inflation rate, and this policy also has a high agent commission. Therefore, investing in this policy is not advisable. So to secure your family financially, you can opt for a pure term life insurance policy with an adequate sum assured, which is available at affordable premium. And to achieve your financial goals, you can invest in a diversified investment portfolio. But always assess your risk tolerance, time frame, and life goals before investing for better outcomes.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.